We welcome in our next guest. John Freeman is here, co-founder, senior analyst at Ravenswood Partners, joining us to talk about AMD and Nvidia. Now, I don't know if you want to call it profit sharing or I don't know. We had a few. For access, profit sharing, pay for play, but 15% of the revenue of the chips sold to China will go to Washington, to the administration, and that is the deal for access to do this. Some of your thoughts on doing this?
Well, first of all, thank you so much for having me, Nicole. It's great to be back on the show. Yeah, so my first thing is, I mean, as an investor, like, we don't like taxes, and this is a tax, you know, this is, but given the situation that we're in and the, you know, the environment we're in, we have to adapt as investors, right? And so so it's, you know, better than nothing, right? Because before we had a complete blockage of sale, and these are trailing edge chips, to be clear. There was about $5 billion worth of revenue for Nvidia, and that's in what is projected to be this year. Consensus has $201 billion of revenue. So, you know, it is not, it's really, it's a nice to have, but it doesn't move the needle that much with regard to Nvidia. Nvidia is really all about generative AI and the demand that we see there.
You know, what's interesting is President Trump was speaking a short time ago and actually said that he spoke to Jensen Huang and said something to the tune of, well, you know, you should pay me 20%. And then Jensen Huang said, how about 15, and sort of a negotiation tactic. And that the H20 chip is actually the older chip. It's not the Blackwell chip, and that's going to be discussed next. It's very interesting because you just don't know. You know, in order to secure this access or license to sell these chips, you know, what comes next? What company is next? You know, in the sights of the administration. That is the part that seems a bit unprecedented. It does serve as a tax, I get that, but, you know, what companies are next is the question, if any.
Yeah, I mean, it really does seem sort of targeted, frankly. Now, having said that, we're talking about the future of generative AI, which is the future of a lot of, you know, the if you know, it's a big part of the future of our economy. So I get the strategic importance. I just, you know, as a pro-capitalist, I just don't like, you know, and particularly taxes, and I don't like them to be specifically targeted almost in a punitive sense, right? I think we should be able to sell them all the chips. I mean, I think we should get them addicted to our technology stack, to NVIDIA's technology stack, have all of their developers, like all of the other developers in the world, use CUDA, the CUDA environment that NVIDIA provides to develop these AI applications. That would be, I think that would be great, but, you know, that's not what's going to happen here. Now, are they going to get, you know, maybe we can get a higher tax? I don't know if that's politically viable to sell China the Blackwell chips, even though I think they should.
Interesting. I mean, there's certainly always the issue of national defense, and that will continue. The AI trade, the AI arms race, generative AI is certainly driving growth, investment, CapEx spending. What kind of names are you watching very specifically along with this?
Oh, that's a great question. I see there's a whole chain, right? You start with ASML on one side and Lam Research on the other. They supply the equipment that's used to build these chips. Then you've got Nvidia, right? And I think Nvidia is really of those kinds of companies, I think it's a superior one to AMD. It's what they call fabless chip company. And then you've got TSMC, which is our largest holding, and I think is probably, you know, really in the catbird seat here. And then on this side, it's Microsoft and the hyperscalers, and Microsoft in particular, I think, is well positioned for, you know, obviously getting OpenAI's traffic, and obviously OpenAI turns out, you know, goes from revenue to basically paying Microsoft, right, to ride on their cloud infrastructure. So, and that's now in the tens, you know, well above $10 billion for Microsoft. So we're starting to see real revenue. There's no doubt about it. There's real revenue attached with generative AI, and, you know, I think the way to play it is that whole look across that spectrum.
So what kind of names do you like that you think could work in a portfolio? I mean, you're following a lot of these tech names. Are the names that you definitely do like here?
Yeah, no, those are the ones. I think Lam Research, ASML on the semi-cap equipment side, particularly if you're a long-term investor and you can ride out the ups and downs of the semi-cap equipment cycle, I think those are two very well-positioned companies. I think TSMC is as well as Nvidia and Microsoft. And and then some smaller names that might be interesting. I think is one called Commvault, which is in data protection. And if all these guys are going to be training on data, data gets more valuable. You can't have somebody taking, stealing your data, holding it hostage. We see this ransomware stuff all the time. The beneficiary there is Commvault, which I think is very interesting too.
I mean, you mentioned Microsoft really had strong earnings report,
Yeah.
more investments into AI. We're seeing a lot of CapEx spend. It shows that these companies are believers. Meta was the first, remember that one earnings season when Meta came out and everybody balked. I think it was like 85 billion or something. It was just and then they all just started spending billions and billions on AI. As you look at these kinds of names, where are we in the AI lineup? Are we very early innings?
I think we are, because I mean, if you look at it, so if you look at OpenAI just from a practical perspective, obviously long term, I think we can all use our imagination and understand the insane value that artificial intelligence could generate. But to get more practical, just OpenAI, right? Their subscription revenue and API use revenue, that revenue is now is expected to be 12 billion this year and 29 billion next year. And by 2000, somebody estimated, obviously this is pretty speculative when you get out beyond the second year. But we're talking about hundreds or at least tens of billions of dollars in revenue in the next few years, and that is what's fueling what is potentially hundreds of billions of dollars of capex to be able to support it. I mean, obviously you've got to have that revenue, that subscription revenue, then last for a very long time as you depreciate the capex. But certainly artificial intelligence doesn't deserve that kind of initial high-end initial investment, right? Then what does? Right? I mean, if you think about it that way, right?
We've had 8 quarters of some good earnings. I mean, people were terribly worried. I know you're following a lot of tech names, but really, when I was taking a listen to some of the commentary, someone said, there's no hard landing in sight. There's no recession in sight, maybe some stagflation, but that earnings season was actually decent or impressive and showing good earnings per share and PE ratios and guidance. Is the guidance okay? Last week the S&P was up 2.4%. The Nasdaq was up 3.7%. It was the best week since June. Do you still see upside potential?
I do, and I think a lot of it is driven by generative AI. Frankly, I mean, if you look at that's the incremental lever. That's what's different between what's different in the economy today versus 2 years ago. And then if you project 2 years out, man, you have to have some pretty rough tariffs and basic change in the tax structure to really disrupt this wave that is occurring. I mean, Microsoft Azure is doing 39% year-over-year growth. Most of this, or a lot of that, is driven by OpenAI and generative AI, and they're talking about 100,000 users of Copilot with Barclays. I mean, so this is not just talk anymore. People are spending real money, and this is and it's proving out the return on investment. And I think we're just at the early stages, And I think that's why, that's why we've got more legs to the market as well. Obviously, there's, it's tough to call. It's really tough to call in the short term. But I'm talking about the 3 to 5 year outlook from our perspective looks really, really good.
So, just back to the main story, which is the China revenues that now they get the export licenses, and this will go, maybe this money is for more national security experts to evaluate. I don't know what that will be for. In the meantime, you mentioned names you like. We're watching data infrastructure. Is there anything there as we continue to build out for AI to perform? if you pull it out a little bit from the AI names
Yes.
you know and love here, you had, Nvidia, Taiwan Semi, Microsoft, you had Convault, Lam Research, and ASML. If you pull it away a little bit, sort of what trickles out from AI, what names do you like there and why?
You mean if I pull out not just including AI, but looking at the whole all of the world of software, roughly defined?
And like also infrastructure and how the monetization of AI is, we know Microsoft is doing that, but we're having to build a lot and we're using a lot of electricity
Yes.
and utilities and things like that.
I see what you're saying. That kind of infrastructure. Yeah, that. Frankly, that gets a little outside of my area of expertise. However, I would say this: there's some interesting companies like Cameco in uranium, which obviously, if you believe the power consumption of these data centers, there's no doubt about it. That's absolutely true. There's going to be, the hardest thing to do will probably be to power these things, not the software development, all that. That'll probably, take care of itself. But the real hard problem is deploying enough power generation to run them, and nuclear power is probably the best for that. And nuclear power really does require, uranium, which is kind of a fixed sort of market. There's not that many much new nuclear capacity comes on in a given year. So so that capacity, as it does come on, will drive their results sort of disproportionately. At least that's the bull case on Cameco.
Where do you think we stand versus China in the AI arms race? I know the president has been saying, he wants to make sure we're leading that. We were just talking about the AI talent war, right? I mean, we're seeing people being poached from one to the other, so as to ensure that the companies, particularly those here at home, win.
Yeah, there's Facebook was offering apparently, 8 and 9-figure salaries, like NBA level contracts, even a single year kind of contracts for the best talent in generative AI and AI in general. I think that starts to open your eyes a little bit, at least to the degree of commitment that these companies are making to AI.
John Freeman, thank you so much. Co-founder, senior
Thank you so
analyst,
much for having me.
Ravenswood Partners. It's so nice to speak with you today. It was a great conversation.